Most people think their tax strategist needs more ideas, but usually they just need better information. Like if your income, your entities, your investments, major purchases, upcoming transactions, if they're all scattered across emails, bank accounts, spreadsheets, or just in your head, then your strategist can't actually plan around something that they don't even know exists, of course. And if they don't find out until tax season, a lot of your options are probably already gone. So I'm gonna show you the exact system I use to organize the information my tax strategist needs when they need it. So tax planning happens before the decisions are irreversible. Let's go. Yeah, so before we even get into this video and I give you the exact system I use, I have to tell you, first of all, what is the difference of strategy, tax strategist? What does that even mean? I have a CPA, right? I have a bookkeeper, I have an accountant. Like, what are we talking about here? So there's a big difference between strategy and tactics. And if you don't understand the difference of that, just turn this video off and go figure that out. If you want to achieve anything in life, you have to have strategy first. A general who's going to war is going to plan strategy. If we're going to sit down and play a game of chess, I'm moving my pawns around in the beginning, strategizing, getting everyone into the board that I need. Then I can go on the offense. And so taxes are sort of the same way. I need a tax strategy, but most of us just think in tactics. So what I used to do, and where this cost me millions and millions of dollars, is I had a bookkeeper and I had an accountant. And at the end of the year, I took all the books that my bookkeeper had done and put together, and they're neatly put together in QuickBooks, and I gave them to my CPA. And my CPA is a historian. They look and go, oh, well, here's what happened throughout the year. Here's how we file it. That's what a CPA's job is. They look at what happened and they file it properly so I don't get any problems with the IRS of filing it wrong. Strategy is something completely different. Strategy is not just managing the moves on the board like a chessboard. Strategy is thinking in advance. What are the things that I could buy or invest in? What are the things I could expense? Where could I take trips or plan events? What could I do in the future to lower my taxes? It's completely different. So strategy, as we talk about it, is planning in advance. In this year, next year, in the next 2-3 years, what could I do to lower my taxes? Strategically, like I said, buying things, selling things, and structuring things. So right off the bat, hopefully that makes sense for you on this video. Strategy and tactics are two different things. And now let's talk about tax strategy. So when it comes to strategy, let's go through some practical things that you can do. So the first thing is you have to plan in advance. So here we are about the middle of the year, a little bit past halfway through the year, and your options are starting to be pretty limited of what you could even do this year to take advantage of tax strategy. So let's just think broad. Now, most people think in your CPA, they think that, well, I have tax write-offs. So I look at all the money that you brought in and all the expenses that you had. Well, we're not going to pay tax on the expenses, obviously, but I'm not talking about that. That's money that you spent. Like, cool, don't pay tax on the money, sure. But like, I'm using this to reclaim money that I would have sent. And so I have to invest into businesses. I have to invest into assets. And that could be anything from rental real estate. That could be solar, oil, gas. That could be Bitcoin miners, things like that. But those things have to be put into service. And they have to be running. And so I can't just do that at the last minute. I have to think a year in advance. So at the beginning of the year, or maybe here at the end of the year, what will I do next year? What are the ways that I can reclaim money that would otherwise go to taxes? Well, if I invest into certain assets, the IRS will give me not just tax depreciation, which allows me to write off my income, which is great. I could also get tax credits. So I would just think broadly, how much taxable income will I have this year, next year? So at January 1, if you're asking yourself this or you're planning out for next year, what will be your taxable income for next year? 100,000, a million, 10 million, whatever that number is. And when I say taxable income, what I'm talking about is the money you'll be taxed on, not the gross, right? So if I'm going to make $1 million, but spend 500,000 to get that, I only have a net of 500,000. The 500,000 the net is what I'm being taxed on. That's my taxable income. So if I made $1 million, I spent it 500, I have a 500,000 of taxable income, then I want to plan for that. So then I go, how can I get 500,000 of tax depreciation and tax credits? How? That's the most powerful question you can ask. But first you have to start with your destination. So this year, beginning of the year, what's my taxable income? What do I estimate it to be? What is the amount of depreciation and tax credits I need to get? And then what assets and systems and businesses can I get to achieve that? So there's two ways that we really want to attack this problem now. So the first is I made $1 million and I spent 500,000. And so there's 500,000 of taxable income. Now the first thing is I want to get that first number, the taxable income, as low as possible. And so I have to think about all the different ways that I can spend money that's already being spent, but I can put it against the business. I can put it against the expenses. So the first thing is I want to get that number as low as possible. Now, if you're a business owner, of course, you have lots of options. If you're a W-2, you don't have as many. But I can do these through normal businesses. And so there's a lot of ways we can do this. Even as W-2, there's options. So for example, I like to take a lot of trips. And what if those trips were business write-offs? Well, the IRS is pretty clear on what can be a business write-off and what can't be. But as long as I do it properly, as long as I document it properly, as long as I spend the right amount on business versus personal, I can write off a big chunk of that. I could take a personal vacation with my wife, or as business partners, we can go do our company meeting on a vacation. I can go to business dinners, or I can just go out to dinner with friends. I can buy things for my business that I could write off. So for example, the IRS typically wants to look at things that are ordinary in your business. So if you're a plumber, you're probably not gonna be able to go buy a Ferrari and write that off. But having a personal brand and being in the wealth space, maybe having a Ferrari is ordinary business for me, and I could write that off. Maybe I need to wear certain levels of suits. And so that comes down to the strategy. I sit down with my strategist, I think through what I'm already gonna be spending, and then we think about how could we take some of these spending items and move them into expensible categories. So that's the first type of strategy we do. Think through what we're already doing, what we're already gonna spend money on. How can we move more of that into expenses and write-offs to bring the taxable income down? That's step number one. So before we even get into now, how do we handle the taxable income, we're still dealing with how do I get that number down? And as you can imagine, boy, that could be overwhelming. That could be a full-time job. Well, good news. You have this thing that you don't leave home without. You don't even go to the bathroom without it. And it takes pictures and it takes voice notes and it does everything else. So when I'm going out to dinner, I can snap a picture of the receipt. When I'm in my Uber, right, all my receipts come in. And so I use a simple set of rules. Number one, anytime I take a receipt, I take a picture of it and it goes into a folder. And that folder I share with my bookkeeper and my accountant. All of my receipts that come in of expenses that I buy, they come into my email inbox. And just in Gmail, you can go right into Gmail and you can set rules. So whenever invoices or receipts come in, the rules automatically forward those over to a box that I share with my accountant and my CPA. And so step number one is coming up with a strategy of what's even gonna go in there. But step number two is collecting that. Maybe sometimes I need to leave a voice note. Hey, here's who I met with, here's what we talked about, here's how much time we spent, and I'm leaving voice notes. So now I have pictures of the receipts, I have voice notes, and all my invoices that come in my inbox are automatically going over to my bookkeeper and accountant. So I don't have to think about this on the fly. I make sure I gotta grab my phone and take a picture, but I already have my phone in my hand anyway. So it becomes very simple. Now, of course, with AI and automations, it's become even easier. So now I can go into Claude Cowork, or I could go into, ChatGPT, whatever one you wanna use, and I can just set up skills and rules where it can go through my inbox, it can pull these things, it can get the voice notes that I put over here, and it can automatically put the voice notes with the invoice and send it over. But these things have become very simple, but don't let technology scare you. It's literally as simple as taking a picture of the receipt, having a rule set up in your Gmail inbox, send it over to your accountant, and collect it. All right, now real quick, there's a link down in the description down below. I'll put a QR code on the screen right here. Hopefully you can see that. And if you want to see how these types of strategies apply to your own specific situation, if you'd like my team to walk through your numbers like I just showed here and help you build a personalized wealth operating system, just go ahead and scan that QR code on the screen right here or the link in the description, put it in your application, then come right back because I've still got more important parts of this video to get through. So, this sounds like a big job. It sounds pretty daunting, and it is. It requires thinking in advance. It requires building a strategy. So how much work is this and how much time should I put forward this? So first of all, it depends, right? How complex is your situation? Are you a single wage earner or a single W-2? Are you a 1099? Do you have multiple clients? Do you have multiple businesses? Do you have multiple entities, multiple trusts, right? So obviously it depends on the size and the scale. The more money you make, as Biggie said, the notorious B.I.G., R.I.P., he said that mo money, mo problems. And so as you get more money, you get more assets, you get more houses, you get more entities. Now I have multiple LLCs that control multiple assets, and then those LLCs are owned by entities like trusts and things like that. And so it starts to get more complex. So the amount of time just depends. But typically the way I think about this is once a year, we do a deep dive. What do I see happening over the next year and next 2 to 3 years? Because some of these things are big moves that might take years to put into play. And so what do I see happening over the next 12 months and over the next 36 months? And we're always thinking long term. And then probably once a quarter we get together and say, how are we tracking towards that goal because we may need to start adjusting on the fly. Let's say, for example, I have a terrible year and I don't have near the taxable income I thought I would have. Well, then I probably don't need to invest or buy as much tax depreciation as I thought I would. So for example, sorry, once a quarter we're meeting, we're sort of truing up these numbers. And then there's the occasional, depends on how much money you spend with your tax strategist, how much access do you have to them. But there's the occasional, hey, I am thinking about doing this thing, buying this thing, taking this trip. How could I classify this? What do I need to record, capture, or say or do in order to make this something that could go into my tax strategy, right? So we've never talked about this specific thing. I want to buy this new asset, this new car, whatever. I want to take this trip. What would I need to do? And this is always the right way to ask it. What would I need to do in order to get it to qualify? You don't ask yes or no questions. You don't say, hey, is this going to work, yes or no? What would I need to do in order to get that? And they say, oh, well, you should probably bring at least one employee with you and you need to spend at least this much time. You have to document this thing. Great. And now I can go do that. And so that's what I do. Once a year, we sit down, we really think through the year, 1 year and 36 months goals. Every quarter, we sort of true things up. And then randomly throughout the year, if things come up, I think about in advance, how can I spend this money? I'm already going to do it anyway. How can I move this onto a business expense? Now, it sounds like a lot of work. And, I guess it is. Compared to what, though? Compared to the amount of time, effort, energy you had to put into making those dollars that you're just going to hand over to the IRS, I'd put a little bit more work in trying to keep those dollars. I already did the blood, sweat, and tears to earn the money. So what does it look like? Well, what it looks like is being able to get your tax bill down as low as possible. Maybe not zero, but maybe it's down to 10%, not 50%. It depends. It depends on what it comes down to, but what it looks like is keeping more of the money that you already made. And why does that even matter? Well, you're living in a system where you earn money first, and then right off the top, your partner, who you didn't choose, which is the government, takes their cut, 30, 40, 50% of that. Then I'm forced now to live on what I have left over. But man, it's expensive out there today. And so it's hard to live on what's left over, especially with a family like I have. And so then I only have a little bit of money to invest. And I'm putting a little bit of money in, and it's compounding slowly. And then for the traditional person, hopefully in 30 or 40 years, you have enough to retire. But what if I took the money that I was spending in taxes and I reclaimed, let's say, even half of that? And I just took that half of the money and I bought assets instead. I didn't make any more money. I didn't work any harder. I didn't take any more time away from my family. I didn't take any more time away from myself or my parents or whatever it is. I worked the same amount of time. I made the same amount of money, but I kept half of it, and that money didn't go into clothes and cars and vacations. It went into assets. For the traditional person, that could help them achieve true financial freedom or replacing their income with assets in 5 years or less. That's the difference. That's what it looks like on the other side of this. That's why it's worth a little bit of effort. Now, I'm guessing most of you thinking, man, this sounds amazing. I'm gonna go talk to my CPA about this. And let me just tell you, that's the wrong thing to do. It's like going to your chiropractor and asking him to diagnose your heart. You probably should go see a cardiologist, not a chiropractor. And so a CPA, that's not their job. That's not how they operate. That's not what they do. You need a tax strategist, someone who thinks in strategy, forward thinking, not in history. Now, how much do they cost? Well, again, it depends. So it depends on how big your tax strategy needs to be. Again, do you have one 1099 account? Do you have 10 1099 accounts? Do you have multiple entities? Do you have multiple entities that are wrapped up in multiple trusts? How many returns? How big are the returns? How much work do we have to do? I would say typically you're going to probably spend somewhere between anywhere from maybe $5,000 up to, on the high end, I've paid as much as $60,000 just to have the strategy. But the thing is that if you're asking that question, you're looking at this completely wrong. Let me ask you a question. If you could spend $1 and get $5 back, if you gave me $1 and I gave you $5 back in exchange, how many times would you do that? How fast and often would you do that? As much as possible, right? And so don't get caught up in looking at things as expenses. We have to look at them as investments. Because if you gave me $1 and I gave you $5 back, you would do that. And that's how I think about the tax strategy. It's not that it costs me 5, 10, 20, 40, 50, 60. It doesn't cost me 60. I spend 60 to get back hundreds of thousands, to get back millions. So the question is, would you spend 60,000 to get back $1 million? Of course, the answer is yes. Now, of course, the next question then is, well, shoot, if it's not my CPA or my accountant or my bookkeeper, like, where do I even find one of these people? Well, Google. I mean, you can start looking around online. Obviously, I'm sort of joking in that, like, if you're going to work with somebody specifically around tax strategy, you probably want to work with somebody that you trust. And I can tell you this from firsthand knowledge. When I sold my first company, my first real business, to a Fortune 500 company, it was the largest medical distributor in the world. I had more money show up on my bank account than I've ever seen before, and I had a real problem. I had to deal with to taxes, and I had to come up with a strategy for it. And my CPA wasn't the guy. It's a whole nother story. So I had to go find a strategist. And I've worked with several. I've worked with many over the years. And the problem is that the cost of getting it wrong is very expensive. So you work with the wrong person, they put the wrong strategy in place. Number one, you may not save near as much as you could or should. Number two, I've had experiences where they put me into things to save on taxes, but the IRS didn't like them, has reversed them, and it actually cost me more money. So go through referrals, make sure you vet them properly, make sure they have a good track record. Part of the system that we offer in the wealth operating system is a list of vetted, trustworthy professionals, such as tax strategists. And the tax strategist depends. So if you're in the 2, 3, 4, 500,000 range, here's a few strategists that would be good for you. If you're making 5, 10 million, well, then you probably need this tax strategist. So it sort of depends on what you need done. And we do have that as a service. But then it leads to the next question. See, every time in life that you solve a problem, it leads to the next problem, which is great. So now I've saved some money in taxes. What do I do with that money? You see, nobody really wants to save money in taxes. I want to save money in taxes so that I can put it back into a system that can enable me to get to my financial freedom number faster, sooner than I ever imagined. And that's what the Wealth OS is. It's a comprehensive system. It's not a tax planning system. It's a system where, sure, I reclaim some of my taxes, and then I speed up the velocity of which they build wealth. And I put together 3 engines that all work together because nobody just wants to save taxes. The saving taxes is a means to get me to my end faster. But of course, you have to get all 3 of these engines working together. They all work together. So it's like, how much should you be pulling out and converting into assets that belong to you personally versus in the business? Like I said, getting this wrong can leave you with a successful company, a business, but surprisingly little wealth outside of it. Now, if you want to see the entire system, I break down the full system of how I build my own wealth operating system that you can copy my playbook. And if you want, there's a video right here that's going to break the whole thing down, and I'll see you over there.